when you analyze the benefits of US-China trade war, Vietnam stands out. And it stands out for the simple reason is that it actually wants it. A lot of firms are looking forward to diversification, and Vietnam was basically positioned itself as the place to go, given its geographical proximity to China.
Vietnam is rising fast. Last year, its economy expanded more than 7%, outperforming its Southeast Asian peers. So what's driving this success, and can the momentum continue? To talk about this, I'm Trinh Nguyen, senior economist at Natixis and an expert in emerging Asian economies. Trinh, thank you so much for joining us today. Now, Vietnam's growth story goes back decades, really, doesn't it, to the 1990s when the economy began to open up. How has the source of growth changed over time?
Well, Vietnam basically had to open up when it had a real estate crisis in basically after the GFC. People thought that Vietnam would be another Asian tiger, but after opening up, a lot of the FDI initially was into manufacturing, eventually was heavily concentrated into the real estate market. And that, given it was a very small market, caused an overheating of the economy. Now, that decline of Vietnam during that period was actually a blessing in disguise, because it forced it to actually grow its nominal GDP, outgrow its debt load, and made huge reforms. And one of the ways it was growing that was to attract foreign investment, particularly in high-tech ICT. So the success was Intel story, followed by Samsung Electronics. And all these stories eventually allow it to build upon its lessons learned, which is basically to provide significant incentives for firms to set up shop and to make sure that the big projects do excel, because they're a huge PR for the company, for the country.
Okay, so a massive success story when it comes to foreign direct investment, and this delicate balancing act that you mentioned between the United States and China. If you look at the source of foreign direct investment in Vietnam, the US is actually a lot further down the list than you might expect. And at the same time, Vietnam has been very keen to maintain good ties. Is this more of a symbolic or kind of political arrangement than an overtly economic relationship, would you say?
Well, U.S. supply chains are very different than Asian supply chains. A good example is I would compare Apple and Samsung, right? So Apple, the way Apple operates is that it designs and then it then outsources to manufacturers that then also get into other suppliers. And that could be the Taiwanese, that could be the Chinese, that could be the Koreans for chips and so on and so forth. The different parts of the actual product that you see for Apple, the hardware, right? Now, Samsung Electronics is very different. It's very integrated. So they try to use their own chips, have their own components, and so on and so forth. So as a result, when an American company outsources production, you don't actually see it as a U.S. process, right? Because basically either its supplier, the Taiwanese, go and move production to Vietnam, which then you will see as a Taiwanese or the Koreans or the Japanese and so on and so forth. You wouldn't see that as a U.S. Reshuffling its supply chains, but those manufacturers supply to the U.S. A good example is Nike, right? Or Adidas, you're German. So, you wouldn't see a Nike reshuffling. You would see a supplier to Nike, right? The manufacturer of those products. So I think that would be a key difference in the way these different companies organize the supply chain. So as a result, when you look at you would underestimate the footprint of the U.S. in Asia if you say we don't see them moving anywhere. It is because the way they organize the supply chains, and that's an emphasis. But I would say the top suppliers, given the fact that the Asians are the manufacturers of goods, right? We take orders from the West, we take orders from ourselves, we take orders everywhere in the world now. And we manufacture, and the big manufacturers are, of course, the Chinese, as you know, the South Koreans, the Taiwanese, the Thais, and so on and so forth. And all of these, when they look for reshuffling of supply chains, they have to see where would they need for the different supply chains. Vietnam is competitive in labor intensive, but increasingly high tech as well, as I mentioned, because it targets those areas. The top FDI investors is South Korea, Japanese, Singaporean, and so on and so forth, the Asians.
I think this is really interesting because if you look at manufacturing, probably the biggest pull we see is cheap labor in Vietnam. As the country gets richer, is it going to be able to maintain that pull for companies, or are they simply going to go elsewhere where labor is relatively cheaper in the future?
Well, actually, yes, of course. And I think that's something that Vietnam has to ensure. And cheap labor isn't the only one. Vietnam is very competitive in electricity. In order to industrialize in a country as hot as Vietnam, you need electricity to cool your manufacturing base. You need electricity to run your factories. And it's basically a lubricant of an industrializing country, right? So Vietnam needs to ensure that its input costs, whether it's labor or electricity, or even when you think about bureaucratic process to set up a business, that's also a cost, to be very competitive. And of course, it is a small country, so cannot absorb all the intentions to diversify, because that would push up not just labor costs but also land costs, right? That would be increasingly expensive. So therefore, if you look at Vietnam, it's actually growing outward now. Before, it was just in northern Vietnam, southern Vietnam, and you can see industrial parks going across the country, because you also have this phenomenon. As more demand to set up factories, there's also demand on natural resources. But I do think as a country, it needs to work on these infrastructure, right? It needs to continue to make sure that cheap labor isn't the one. Labor productivity is quite important. Laws have to be reformed. The physical infrastructure has to be improved over time as well, right? And this is where it continues to not only expand the energy supply, but also develop the grid, the distribution of it. It has to be efficient, right? And I think that that's an area that the government is trying hard, and where it can maintain competitive edge, right? If you think about Vietnam as a country that has cheap labor, that has massive labor, that more comparable to Vietnam is India, right? But why is Vietnam attracting more manufacturing FDI than India? So I'll give you a statistic. In 2024, Vietnam attracted roughly 25 billion US dollars. 60% of that is manufacturing. It's quite a substantial number, and that's much higher than what India attracted, a country that is not comparable in population. But the key reason why is the fact that, as I mentioned, is Vietnam wants it, right? It wants every segment of the manufacturing supply chain, but three segments particularly: labor intensive for its low skilled worker, footwear, textiles, and ICT. So I do think that as a result of that, it's much more targeted in trying to give support. And because it is a policy priority, then it would try to do everything it can to attract much more investment, and therefore investors then find it much easier to go to Vietnam than say go to India, where there is some priority, but there isn't as much support. And in particular, textile and footwear is something that India doesn't even prioritize, and not even register in the prominence as something that I argue should be a key area for India to move forward. So as a result, you can see that. And the second thing I forgot to say is actually I focus a lot on infrastructure and labor, but also soft infrastructure, right? An area that needs significant improvement in Vietnam. I haven't talked about the rule of law and so on and so forth, but one thing that has done well is trade liberalization. A lot of people are talking now about is Vietnam going to be a victim of its own success, right? As you know, export as a share of GDP is roughly 85%. Export to the US is almost 30%. It's roughly 28% of GDP. That's a huge number. And the reason for its success, it's able to attract an investment, is that it's been very aggressive at liberalizing the trade access. And what I mean to that is that, of course, it has the EU FTA, which in Asia, only Vietnam and Singapore have. Other countries are in negotiation. Vietnam has FTAs with many, many countries in Asia. And it's trying really hard to improve its status with the US, for example. But relative to China, it has lower tariffs, for example, and this is one of the reasons. So I think that trade liberalization is an area that it can continue to try to foster, particularly if it can gain some preferential access to key markets such as the US. So the goal is not just to avoid tariffs, but also to actually remove further hurdles, right?
Trinh, could I jump in there? You've mentioned trade agreements and reducing tariffs, but we also have to talk about Vietnam's currency as a big source of its competitiveness, the weak dong. It has a $100 billion trade surplus with the United States. We had data out this week, I think around $110 billion. This is hugely driven by a weak state-controlled currency. As the country develops, do you see any scenario where the government might decide to relinquish its control of exchange rates?
That's actually quite interesting because for the Vietnamese side, it's a totally different story, right? They're very worried. In Asia, we're very worried about the strong dollar. The dollar is super strong versus the euro versus Asian FX. The dong has been depreciating, and now they're talking about, should we hike interest rates to defend the dong, so on and so forth. So this is a very different dynamic. Obviously, when you say that the FX is being controlled, which means that the central bank has tried, because it suffered through this period where they had very low reserves, they had a lot of these issues, and therefore they had to start building a buffer of FX reserves, right? So they started building this by, as I mentioned, having a little bit of surplus and building it. So their FX reserves have been rising a lot, and there's less concerns about this issue that Vietnam, being a frontier market, going to have not enough money to afford imports and so on and so forth. But I think the issue here is that this $100 billion surplus that Vietnam has with the U.S. is whether or not significant of that is rerouting via China avoiding the tariffs. And I would argue that it isn't, right? Vietnam is not a country that is competing for dominance in global supply chains. It's targeting key areas only, and it's very small in size. Obviously, it's gaining significant access to the U.S. Now, there's a study by the Harvard Business School that estimates the rerouting. It has increased, but it's much smaller than you think. By product, it's roughly 16%, but if you go to the firm level, it's at 1%. So there is some level of rerouting. And the reason why Vietnam has a greater trade surplus with the U.S. is also for different reasons, not just there's some increase of rent, but the fact that increased investment in Vietnam means that more things that are, for example, Samsung phones shipped to the U.S., which is essentially a Korean, most of the value add is Korean, but the final assembling is in Vietnam, is taking place, right? It is a country that is still relatively poor. GDP per capita has risen to 4,700, but relatively poor. It is not a threat to the United States. And if President Trump were to impose tariffs to China, the big question is then where will he reshuffle the supply chains to? Is that the end goal? I don't think that is the end goal. The end goal here is to make sure that the Vietnamese are able to capitalize this and add value to their own economy, and through these diversification of supply chains, create some indigenous capacity, right? This is to hedge and diversify supply chain risk. Vietnam is a cheap country in terms of labor costs. It is the U.S. is an expensive country in terms of labor costs, right? We're talking about labor shortages in the U.S. So it is not in the interest of the United States to do blanket tariffs on countries that are relatively cheap, right? So I do think that that concern is not really a huge worry for me. I do think that tariffs are coming in terms of escalation of tensions between the U.S. and China, meaning I continue to think that this is a country that's positioned to benefit, mainly because it is not a threat to many countries other than Cambodia and Laos, right, which are neighboring countries to Vietnam in terms of security. But otherwise, I think Vietnam is in a relative position as like a neutral country that many countries could benefit from using it as a base for supply chains.
I want to look a little bit more deeply into what you mentioned about the country developing its own industries. Vietnam has huge resources of rare earths. It's the second largest after China, though we should say it's second by a large margin. But the country hasn't really managed to fully capitalize on that, has it?
Well, rare earth is actually not rare, right? Just like in the U.S., there's rare earth as well. People just don't process and mine it and so on and so forth. So I think that's a big question. The big question is that should we, given the fact that China is quite efficient and very, very motivated to basically have more self-sufficiency of the supply chains, and as a result, is much cheaper to then just import from China, should the rest of the world just import everything from China? The answer, if you think from comparative advantage, is yes, but from a security advantage is probably not, right? And we saw that during the COVID periods, that when you depend disproportionately in one country, should they shut down their supply chain, you actually don't get the goods you need, right? And or because they actually have COVID themselves, or for whatever reasons, right? Or to use it as leverage. So I do think that more of that needs to be developed, not just in Vietnam, but across the world. And it isn't symptomatic of a commodity that needs to be developed, but you can extend it to many areas, right? An area that people tend to talk about where China dominate is really in, for example, in EVs, where they have been ahead of the curve. Given the fact that they're not ahead in combustion engine, has gone into Latin America and gone into Indonesia, so gone into these countries to develop supply chains. And so therefore, if the West wants to take a certain direction in policies, want to push down fossil fuel combustion engine and develop EV, it also needs to think about this question, right? How is it going to then efficiently manufacture and create these things? And I think that's a question that people are grappling with, and that comes at a huge cost, right? Because in order to develop and do this, you then have to channel your limited resource to do so. But for Vietnam, I do think that the most pressing issue at the moment is really power, right? Power in terms of, yes, it's been growing it very rapidly, but still more is needed. It needs to work on physical infrastructure. In terms of resources and diversification, core resources, energy is going to be very key. Is rare earth on the top of the agenda for Vietnam? I would imagine probably not, but it's probably a top of the agenda for the United States if it wants to escalate tensions with China. And this is one of the levers that China can push back.
Yeah, there's energy power, and then there's political power as well. Tao Lam was appointed General Secretary of the Communist Party in August. What is his economic vision for the country? How is he going to go about tackling these complicated geopolitical relationships?
Well, that's a question you should ask him. But if I were to reckon, one of the things that people are talking about in terms of political developments in Vietnam is really what he's trying to do administrative, right? He's trying to streamline the bureaucracy in Vietnam, and so I do think that for him that's one of the concern. I think that there are many areas of priorities for Vietnam at the moment, but that's something that people are talking about a lot, particularly given the political corruption scandal that has erupted recently. I think there's a lot of cleaning house in order. I think the big question when people talk about Vietnam and the bigger picture from investor is really, yes, it is a great place to do business. Yes, there's a lot of issues, but it is some place that we can work with. But overall, there's still a lot of room for improvement in terms of governance and so on and so forth. And I think that's what he's going to try to tackle. Whether or not it's a political tackling to really kind of streamline things down the road, or a political reshuffling within the Communist Party is a big question. But I do think that there is huge motivation for Vietnam to improve its GDP per capita and industrialize before it's too little too late. As you know, Vietnam fertility ratios are declining just like elsewhere. It's still not a dire state, but it is something that it has to work on, in that it needs to at least reach the high income status before it starts aging.
Economies need people. Trinh Nguyen, Senior Economist at Natixis, thank you so much.